Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's take a look again on the euro currency. So indeed, as our forumers told on our forum, our members, that market currently is really strongly politicized. It's a really big rustle in the United Kingdom Parliament concerning the Brexit. In Brussels as well, talking stand that they are really tired from the indecision of the United Kingdom concerning the Brexit agreement, and so it seems that they need to take the decision as fast as possible. Well, and by this reason, the euro currency and the Great British Pound in recent time probably will be standing additional pressure of the Brexit decision, and that will bring more volatility on the market and technicals. The technical analysis could work not as good as it works usually. So the technical price action by the technical factors could be a bit skewed and or even destroyed by the external driving factors, political decisions, political impact. So, but anyway, currently the price action that we have suggested yesterday has been completed. So yesterday we said this market probably should show the pullback because it was the confidence resistance and was strong over bot area, and that it's normal price reaction on the strong resistance is a pullback. And that has happened. So currently you can see the market has dropped back to the trend line support and monthly pivot point. So now we need to understand what we could do currently, what trade could be realized on the euro currency, and what really could happen in the nearest future. So yesterday I said that I would prefer a bit smaller pullback, just minor reaction and then upward continuation. It will be much better because, as you can see, by the recent action, market almost has erased all rally that has followed on the Fed statement, and that is not really very encouraging. So we'll take a look at the dollar index daily chart. This is June contract, and you can see the same story. So here you can see that upward rally was even greater than the previous sell-off on the Fed statement. So well, here is you can see this is action to the downside even smaller compared to the euro currency. What we have here, this is upward action stronger than action to the downside, and that's gives more chances for downside continuation. So it could be a bit deeper retracement. In such circumstances, when from the one point of view you have the strong upside rally, but at the same time you see that retracement is too strong, there are two major rules that you could rely on. So first is trying to follow the momentum. That makes trade safer. And second, for an entry point, whatever the direction you will choose, either upside or to the downside, try to use some strong levels for taking the position. On the 4-hour time frame chart, you could see that the sell-off yesterday was really strong, and market mostly has erased the all rally that has happened previously. Pullback here to the upside right from the confidence support that we have talked about in the trend line doesn't look really very strong currently. It means that actually here we have a kind of the bearish engulfing pattern, guys. And as you know, engulfing pattern as a rule suggests two-leg action. So first leg is engulfing itself, minor pullback inside the body of the pattern, and second leg is extension. So usually it takes the shape of the AB equals CD pattern. Following this logic, you can see on the hourly chart what we have actually. uh, applying our rules that we have said, we need to choose the patch, the level where it will be relatively safe trying to take the position. So currently, guys, I do not see any bullish continuation patterns here. So I do not see any catalyst triple to buys or something that could tell me that market is continue upward action. So here I see the A, B, C, D kind of the retracement after the sell-off. And it means that the things that were talked about with the potential bearish engulfing pattern are still valid. So currently we are watching for a pullback and sign of the body of the pattern. From that standpoint, it is relatively safe choosing and watching for 114 area for taking the short position. Why? Because that will be AB equals CD target, and this target coincides with the fib level, so this will be agreement resistance. Also here we see that CD leg stands flatter compared to the OB, so we see the slowdown of the upward action. And it means that this is the potential area where it will be relatively safe for taking the position to the downside. Because if even market will show the upward continuation at the first touch of this area, it's probably the pullback down will happen, and that led us to move stops to the break-even. So we're taking the position, placing stop somewhere above this area. As market starts dropping, passing 20 pips, for example, you could move stops to the break-even and see what will happen, or even grab the half of the profit if you're trading on short term. If we will be right, we will get A, B, C, top, D pattern to some target to the downside. If we will be wrong, we at least will get break-even trade and we'll see what will happen next. So current setup that we have here on the euro currency doesn't tell yet that this upward action is over and we will not see any upward continuation that we have talked about yesterday. Absolutely not. The bullish setup is still valid. The trend here is bullish. It just means that probably upward action could start from a bit lower level, a bit later. That's what we are talking about. We're just talking that the retracement here, based on this engulfing pattern, could be a bit stronger and a bit deeper. But it doesn't erase the suggestion that market could follow right to the 115.50 area. So that being said, today the downside retracement stands in focus. That is what we'll be watching for, in particular, opportunity for taking position right around 114 area. So if we will see this fast breakout of this area, it's kind of this manner with just rally upside jump, of course, don't be short. We need the gradual action. We see the gradual upward retracement. It's kind of the ABCD action, so something that we see right now. And let's see what we'll get by the end of this week.